Mila, here we're going to be doing accounting paper 2, November 2023. We'll be focusing on question 4, which is the last question. It is based on stock valuation and fixed assets. Without wasting any time, let's get on to it. We need to choose the correct cost concepts from those given in brackets. Write only the words or word next to the question number, which is 4.1.1 to 4.1.3 in the answer book. Now, 4.1.1 says the periodic or perpetual stock system records the cost of goods sold at the point of sale. We know that for periodic, that is only done at the end of the year when we have counted stock or after every stock count. So it's not happening immediately. That's why we call it periodic. Perpetual is continuous. So for this one, it will be perpetual. So we're taking off periodic. Okay. The first in, first out or weighted average method is more relevant for low-cost stock items purchased on a regular basis. Note that when you purchase small items on a regular basis, you'll buy them at different prices because prices change now and then. Because there's a lot of them and they're small, it's difficult for us to trace the cost of each item. Therefore, to estimate a cost that is closest to the original cost, we have to use the weighted average method. So for 4.1.2, we are going to choose weighted average method. And 4.1.3, the first in, first out or weighted average stock valuation method will value closing stock at the most current stock prices. With weighted average, remember you have a lot of stock items. You don't know when the other one was purchased. There's a lot of them, and it's hard for you to trace the cost price. So for this one, we know it'll have to be first in, first out method. And now it comes from the principle that the ones that you purchase first will be the first ones that you sell, meaning that the oldest will be sold first and the newest will be sold last. First in, first out. So the ones that you have recently purchased will form part of your closing stock. And that's why they say closing stock will be at current recent stock prices. So for this one, it'll definitely be first in, first out method. Let's go to 4.2. Now, Clearview Electronics is owned by Tsebo. The business sells two models of printers, which is Howie and Yama. The specific identification method that is important is used to value their stock. Their financial year ended on the 28th of February 2023. Good internal controls ensure that there were no stock shortages. And it continues up to this side. So the first question, which is 4.2.1, wants us to calculate the value of closing stock. We need to use specific identification method. Now, the problem here was that these two printers do not cost the same. So I couldn't just automatically calculate the value of closing stock because here you were not given the value of closing stock for each item. And even if you were given the value of closing stock, you couldn't just take it and multiply by 3.8 because some of them will have been Yama printers, which cost 5,410. Remember, this is specific identification method. Now, they gave us sale of printers and stock holding period. So we sold 300 printers, Howie printers. We sold 440 Yama printers. And they also gave us the selling price of Howie printers, which is 5,700. And the selling price of Yama printers will be 7,300. And they gave us stock holding period for Yama printers, but they didn't give us stock holding period for Howie printers. I'm guessing some way we're going to have to calculate the stock holding period for Howie printers. So to calculate this, I always give my students one method. You first have to find units available for sale. And for you to find units available for sale, you'll have to use this formula, which is opening plus purchases minus returns minus damaged plus gifts. So I'm going to split into two, Howie as well as Yama. So units available for sale for Howie will be made up of the opening number of units was 90. We purchased 340. So all of this information, I'm getting it from here. So we purchased 340, right? And then we're going to minus the 5. So it is the 90 plus 340 minus the 5. And for Yama, we'll use, we only have this 495 for Yama. We only have this 495. There are no returns for Yama. There are no return. There are no units from last year as well. So when we calculate units available for sale, it's always opening plus purchases minus returns. But for Yama, there was no opening, there was no purchases. Well, there were purchases which amounted to 400 and what was 400 and what? I forgot what it was, but there was no opening. We're just gonna add the purchases and minus any returns, which actually there was none. So basically our stock movement for Yama will be that 495. These are units available to be sold. All right. To determine closing stock, you simply take units available to be sold and then you minus units sold. So units available to be sold for Yama amounted to 425. You minus units sold, which was 300. So you'll be left with 125. And for Yama, units available to be sold will have been 495. You minus units sold, which was 430. So you'll be left with around 65, if I'm not mistaken. So this is 125, and the other one will be 65. But this 125, they cost 3,800. So to get the value of your closing stock, you'll take 125 multiplied by 3,800. And for Yama, they cost 5,410. So you're going to take the 65 and multiply it by 5,410. Add the two to get the total value of your closing stock, which will be 826,650. Now they say calculate how long in days will it take to sell closing stock. I want you to highlight this, okay? Sell closing stock. Had they said how long will it take to sell stock, the formula was going to be totally different. When they say how long will it take to sell stock, we use the numerator was going to be average trading stock divided by cost of sales multiplied by 365. But here, because they're saying closing, the formula changes. Please note that stock holding period formula, when you only determine how long it will take to sell closing, it changes to closing stock, you divide it by cost of sales, and then you multiply it by 365. I hope you wrote what I've just said to you. Closing, it's only this formula. If they said how long will it have taken to sell stock, the numerator was not going to be closing. It was going to be average trading stock, which is basically half of opening balance of trading stock plus closing balance of trading stock. Okay, and then you close bracket. Divided by cost of sales multiplied by 365. But here they said closing. How long will it take to sell closing? So your formula changes from being average trading stock to just being closing stock divided by cost of sales. Now, our closing stock, we just determined it above, all right? So you will take it, the total as it is. It was 475,000. In case you're wondering where I got the 475,000 from, it comes from here. You only focus on Howie. This is it. This one over here, right there, right there. Let me just show you how it was calculated. It's 125. You multiply it by 3,800. It gives you 475. And then you will divide this by the cost of sales for Howie, which is this 300 multiplied by 3,800. It'll be 300 multiplied by 3,800. Let's see what it gives you. No, 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 no. 300 multiplied by 3,800. It gives us 1,140,000. So our cost of sales is just the cost of how we printers that were sold. That's what cost of sales is the cost price of goods sold. Cost price of goods sold. That will be your cost of sales. You got it. That's what cost of sales is. Cost price of goods sold. So we sold 300 printers and their cost price was 3,800. So you just multiply 300 printers with 3,800 to get the cost price. That's what cost of sales is. We good? Awesome. So for me to determine the stock holding period, you just multiply, because they said in days, that's why I'm multiplying by 365. Had they said in months, we are going to multiply by 12 and putting this into your calculator, it'll give you 152.1 days. That's it. Now here they're saying, explain whether Tsebo should be concerned about the stock holding period of Howie and Yama printers. Quote figures, give possible reasons for the difference in the holding periods of two models. Think about it. Printers, guys, are an equipment. So at least it must take you around, let me say, a month to 6 months to sell one. Because it's not like printers, if someone has a printer, it's not like they will need it every day. So it's not a daily consumption. It's something you use and it might take longer. So I think 3 to 6 months will be appropriate for printers. All right. The reason why I'm saying 3 to 6 months is because of technological changes. So if you hold too much stock, you might not be able to sell it. All right. And one thing I also noticed is that Howie printers are cheaper than Yama printers. Did you notice that? What could result in Yama printers being more expensive than Howie printers? Howie printers might be of low quality. They might not be as technologically advanced as Yama printers. Do you get it? That could be the reason. Which makes sense as to why with Howie there were 5 printers that were returned. Probably they are not of good quality compared to Yama printers. So to answer this, I said that Howie seems to be cheaper than Yama. 5 of Howie printers were returned by customers, while none of Yama printers were returned. The reason Howie takes longer to sell compared to Yama printers might be because of their low quality, or they might not be technologically advanced like Yama printers. So Tsebo must be concerned with slow sale of Howie printers, as it takes twice longer to sell Howie printers compared to Yama printers. So Tsebo might need to consider selling more of Yama printers than Howie printers. I mean, Yama printers cost more, selling price is higher, and you hardly have any return. So why not just invest more on Yama printers and make more money from Yama printers, right? The next question says, calculate the cost price of vehicles on the 1st of March 2022. For this one, I need to go back to the information sheet and focus on vehicles. And this is all I've got when it comes to vehicles. So they gave us a depreciation policy. Vehicles are depreciated at 20% per annum on diminishing balance method. Highlight the method, meaning that you calculate depreciation on carrying value. Computers are depreciated at 25% on cost. Good. Gave us vehicles, but they didn't give us the cost of vehicles at the beginning of the year, right? Which is what I think they asked us to calculate. Computers, we were given both, and then they didn't give us accumulated depreciation for each for this year. Let's continue reading. They say a vehicle was traded in for a new one on the 1st of June 2022, and the new one cost 260,000. So that is your addition, right? The extract from the fixed asset register reflects the following. So this is the vehicle that was purchased, and I guess it was sold because it stops right there, meaning that it is the one that we traded in. All right. We traded in. So that's why it's used up to the 1st of June 2022. I do have a video focusing on the asset register. Just Google asset register or search asset register in my under the videos, and then you can read more about the asset register. I have a lot of examples there that you can do. Now, this vehicle, note that we traded it in, but the profit on the disposal of this vehicle was 5,560. This tells me that we traded in this vehicle at carrying value plus this profit, meaning that it was traded in at 5,560 above its carrying value. That's why we've got a profit. Okay. So focusing on calculating the cost at the beginning, I prefer to teach one thing. I don't like doing a lot of things. So I know some of you were taught to prepare the T account, but I thought that is a waste of time. If you have learned how to do your tangible asset note, then you should be cruising through this. If you know the asset, the tangible asset note, the fixed asset note, you're done with this. Normally, it starts with balance at the beginning of the year, which is what we don't have, right? And then you'll have additions at cost because everything here will be at cost price because we are not given carrying values. If we were given carrying values, oh my word, that's going to be totally different. We were still going to have additions at cost, but we were going to have disposals at carrying value. But here, we're going to have disposals at cost. And then you were going to have to subtract depreciation if you were given carrying values. But here we were not given carrying values, we were given cost. So everything will be at cost price. I taught this in grade 11 thoroughly, where I showed my kids that you need to be able to calculate using cost only, and you need to be able to calculate using carrying value only. Carrying value only, it's only carrying value at the beginning plus additions minus disposals at carrying value minus depreciation, and then you'll have carrying value at the end, and then you can work out what you need. Okay. But here, to work out that balance at the beginning of the year, we just had to use cost because we are given cost. So this disposal will also be at cost. It was 180. You did see it in the asset register, and you were also given cost at the end of the year that I read it out to you. It was 930,000. So to determine cost at the beginning of the year, you're gonna work in reverse. We call it reverse operation. You're gonna take this, add what you subtracted and subtract what you added, and there, boom, it gives you cost at the beginning of the year, which is 850,000. Awesome, isn't it? The next point says calculate the trade-in value received on the vehicle disposed of on the 1st of June 2022. The first thing I did was to draw my number line because I need to know what's happening. So the cost price at the beginning of the year, I got it, it was 180. Did you notice that? We also were given carrying value at the beginning of the year. And the carrying value at the beginning of the year was 64,800. In case you're wondering, where did you get that? I got it from my asset register. Note that they gave us balances at the end of 2021 and they gave us balances at the end of 2022. And the carrying value at the end of, the accumulated depreciation at the end of 2022 was 64,800. So what is closing balance in 2022 becomes opening balance in 2023. So that 64,800 becomes the opening balance of your accumulated depreciation in the current year, which is 2023. So that is why I subtracted carrying, to get the carrying value, I subtracted accumulated depreciation of 64,800. And then I got my carrying value. This is all at the beginning of the year. This is all, I'm calculating all of this here. All right. It gives me carrying value of 115,200. All right. But note that this vehicle for the current year, I only used it for 3 months. Okay, since I use it for 3 months, and I did highlight the fact that vehicles are depreciated on carrying value. To calculate depreciation using diminution balance method, you will calculate it on that carrying value of 115,200 multiplied by 20% and then multiplied by 3 over 12, because in the current year, we used this vehicle for 3 months. It'll give you current year depreciation, which will be 5,760. Now I'm going to calculate carrying value when the asset was sold, which will be on the 1st of June. So the cost price still remains, but what will change will be accumulated depreciation. So the accumulated depreciation on that day will be the current year depreciation plus accumulated depreciation at the beginning of the year. Remember, depreciation, accumulated depreciation is only increased by depreciation. So that is why you're going to take 64,800, add it with 5,760 to get accumulated depreciation on the 1st of June, which will ultimately allow you to get the carrying value on that day, which will be 180,000 minus 70,560, and it will give you carrying value of 109,440. So this is the carrying value. And we traded in this vehicle at carrying value plus the profit because we made a profit, meaning that we traded it in at 115,000. If it was a loss, we would have traded it in at 109,440 minus 5,560. Here we add in 560. If we have a profit, it means we sold that vehicle at carrying value plus the profit. If we had a loss, it means we sold that vehicle at carrying value minus the loss. I hope I'm making sense. The only time you'll have a profit on sale of an asset is when the selling price is higher than the carrying value. And the only time you'll have a loss from the disposal of an asset is when the carrying value is, the selling price is lower than the carrying value. I hope that makes sense. Okay, and then they say this here. Explain to the bookkeeper why his method is incorrect. Probably I lost, eh? Let's go back. Go back, 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 back. I'm gonna get here to 4.3.2. The bookkeeper calculated depreciation of the computers as that. I see that the cost price for computers was 300,000. Depreciation rate is 25%, and depreciation will be 75%. Hold on. Do you notice that method is correct? It is correct. So the bookkeeper is not wrong. But now they are asking you, explain to him why his method is incorrect and provide a calculation to support your explanation. Guys, there's nothing wrong that the bookkeeper did here. Nothing. However, the bookkeeper didn't do something. It's not wrong. It's just that the bookkeeper did not do something. Guys, your teachers have emphasized this, and I have emphasized it if you watch my videos. I always say before you calculate current year depreciation, always calculate carrying value at the beginning of the year. Whether you use a diminution of the cost price method, always calculate carrying value at the beginning of the year. So from what I saw from the bookkeeper here, the bookkeeper did not calculate carrying value at the beginning of the year. That is the biggest mistake that the bookkeeper did. The bookkeeper needs to first find the carrying value of the computers at the beginning of the year. When calculating current year depreciation, it must be limited to carrying value at the beginning of the year minus 1. That's why you need to calculate carrying value at the beginning of the year. You need to make sure that current year depreciation does not exceed that carrying value. If it does, you limit it to carrying value at the beginning of the year minus 1. This is to ensure that you don't end up having a negative asset, because that will not make sense at all. So this is what the bookkeeper was supposed to have done. The bookkeeper was supposed to have determined the cost of this vehicle at the beginning of the year, which was 300,000, and then minus carrying value at the, accumulated depreciation at the beginning of the year, which was 262,500. If you're wondering where I got that from, guys, I got it from here. Okay, this is on equipment. There it is. Accumulated depreciation on computers, it is 262,500. You see where I got it? Yeah. And then I calculated carrying value at the beginning of the year, which is 300,000 minus 262,500 gave me 37,500. And then the bookkeeper, as I've said, what they did was right. They calculated current year depreciation as that, and they got 75,000. Do you see where the problem is now? Depreciation is more than carrying value at the beginning of the year. So we couldn't take the 75,000 rand. So we had to limit depreciation to 37,500 minus 1. Hence, our current year depreciation will be 37,499. You got it. If not, please check out videos on depreciation tangible asset. Just search there on YouTube, you'll find them. Okay? Guys, I'm giving you a menu on how to pass. And it only relies on one thing, and that is you understanding what you're doing. That's why I'm explaining them thoroughly. I'm not just giving them. And you will notice that some of my answers are different from what is given to you in the menu. Okay. But we do get to the same answer somehow. It's because you need to understand what you're doing. Okay. So here, that's what we're going to have. Now, explain two possible points that the CEO can use to support his decision. I have no idea what they're talking about here, so I'm going to have to go back. What decision are they talking about? Oh, 4.3.3 says that the CEO, Lee Clow, okay, Clow, wants to improve the company's image by donating the old equipment to a local school in March 2023. He also plans to upgrade the software on these computers at an extra cost of 20,000. The shareholders feel that the old equipment should be sold at a profit. Explain two possible points that the CEO can use to support his decision. The only thing that I picked up immediately was that, guys, as a business, your goal is not just to generate profit. You focus on, we're pushing three P's here. We're pushing three P's. The first one is profit, people, and planet. Okay? We call them triple bottom line. Those are the three things we focus on. So the first P that we're pushing is that the business needs to generate profit, which is good, right? The second P that we're pushing is about people. And I'm sure you guys have seen striking people, mine illegal mining and stuff. The reason why people end up doing illegal mining is because where they are staying, there were mines operating there. But these mines did not contribute anything to those communities. It happened in Mpumalanga, Emalahleni, it's still happening even now. They don't contribute to the communities around the mine. Now think about this, right? I have a huge business, and let's say I come to your house, right? And I'm like, hey, underneath your house, there's gold or platinum in there. I need to mine that platinum. So I end up talking to someone in government, blah blah, and then I end up getting your house, and now you end up being in love with this mine, right? But that place was yours, right? But this guy is generating millions, and he's has a private jet. He lives somewhere in America or the UK or China or wherever. Now you see every day 2 billion rand live in the mine, but you're starving. You can't even plant there because the mine, so when they mine there, it affects the soil. You can't do anything, right? In that case, the people that are close to the mine are suffering, but there are billions being made by this mine. Is it fair though? Hence, they say people must also benefit from this. And guys, it doesn't take a lot of money. It's just that South African businessmen are just greedy. Okay. You can still take your 100 million rand, but at least take 1 million rand and give it to the people. Build nice houses, build nice roads for them, and employ their kids. Because, I mean, you are just there on their doorsteps. Do something. So, hence, here, we have a business bottom line is not just to generate profit, it is also to contribute to the communities where the business is located. Now, contributing to the communities is also a good marketing or advertising strategy. This might result in sales increasing in the future because people will sympathize with you that you're doing a good thing. Will sympathize with you. That's it. And it's also marketing. You take pictures there and then you put it on the company's website that you do care about people. You got it. Does it make sense? I hope it does. All right, that is it with respect to November 2023 paper. I know that there are subscribers that have been asking me to post more of this. Here it is. Right here it is. Sorry for taking so long. I'm a busy man. But here it is. All right. I'll continue with 2024 June paper 2 probably tomorrow. This is it from me, Refiloa Litjamela. May peace be with you, in case you're wondering what Khotsong means. Cheers, bye.